Hi, it's Paul here from Property Apprentice. Just thought I'd do another podcast to some of the interesting things we've seen over the last couple of weeks, and also some thoughts I have around some parts of the market right now. So first thing we've noticed, absolutely, that sales listings are up quite considerably. And I think that as we start to see more interest rate increases, we'll see that to continue and we'll get more and more listings come on the market as people want to offload what is now going to cost them a lot more on a monthly basis. On the flip side to that, you're also seeing some house sale prices coming down. I know auction rates are pretty low, pass rate. So you're actually seeing more properties that are going to auction that are now not selling. And I know we're seeing a lot of price by negotiation, or we're seeing a lot of listing prices coming up even prior to auction, which is really good. This is absolutely the part of the market that we really enjoy, because you don't want to be scrambling at an auction with 20 other people. You actually want to be able to negotiate and take some time to actually be able to make sure you're doing due diligence on the property, potentially even be able to get a discount. Now, something that we saw this week was a property that a client of mine was looking at, which was a multi-income property, which was on the market, had a listing price of 1.85, so a reasonable expensive property, but it worked as a return and it had potential to increase value, which by increasing the value, you also increase the rental return as well. So there was potential with the property. Before they even engaged the real estate agent, the week they were looking at it, the agency actually dropped it by $125,000. So that's quite a chunk of money off, yes, a $1.85 million property, but it is quite a bit of a discount. So, and that was without any negotiation. So this is something that you will start to see now, and it's all relative to the value of the home. But this is something you're going to see start playing out in the market right now, is people are going to be more negotiable, because if they don't have 20 people to play with as purchasers and there's only one or two or even one, they've got to meet the market, and you've got to put your best foot forward. That's, you know, a fair price, but what you think the property's worth, and more importantly, what return you want. And this is something I have mentioned before, but I think it is so important. Too many people that I meet that come to our free events or I have a meeting with don't know what it is that they want to achieve as a return. They just want an investment property. That's not good enough. You can't just want an investment property. You've got to have a goal. You've got to have a reason that you're doing this. You've got to be thinking about, well, what kind of rental return do I want? And some people that I meet that are on the hunt or have been over the last couple of years, that they just want a property and they're quite happy to open their wallet and let somebody else do it for them. And I just don't think that that's clever or good advice. And another thing that we have been seeing quite a lot is a lot of mortgage brokers. We've had a lot of financial advisors that are selling properties to clients from developers. It's not good advice. They shouldn't actually be doing that. And if you're ever in that situation where you're talking to an advisor, either financial or mortgage, and they say, why don't you consider this property that I have? You should be asking them how much they're making from that property. And that is actually a legal requirement, that they have to disclose the amount they're making. And that's something that as a company, we have never done, and we won't, because I just don't believe in it. You can't have impartial advice from somebody who's making $25,000-ish off a property. It's just not right. So those days, I think, are now going, which is good, because if they're getting 25 grand, you're definitely paying overpriced for it. And a lot of the rental returns and etc. have been maybe slightly inflated, not always, but a lot of the time. And you need independent financial advice. That's one of the things that we do. And Debbie, my wife, if you've seen her on TV or come to one of our events, is a fully qualified financial advisor, residential lending and investments. So can give you on the lending side, although she's not a mortgage broker, but understands it, and the investment side as well. And that's what you need. If you're talking to a financial advisor that's got both of those qualifications, great. You still have the right to ask them if they're going to supply you a property, how much they're making. But that's something that you have to take hold of. That's something you've got to ask, or you've got to read their fine print if they're doing their disclosure statement properly. So that part of the market, I think, now is quietening down. And that is good. I think that there's a lot of issues with a lot of the developments that are going on. There's a lot of developers in New Zealand, and a lot of the banks are starting to pull back from them. So I think you will see going forward, there'll be either increase in prices due to supply chain shortages, which is not their fault. I know through our own trade account at Bunnings that I've been contacted for our clients, because our clients access our account. And basically, if you want any jib board, your July, maybe even September. And now today's the 17th of February. You know, that is a long way off. So people won't be able to survive. Newer developers won't be able to survive that long. So if you're looking at a contract with any new build property, you need to go and sit down with your lawyer and make sure that you understand all the terms and conditions that are included in there. If there's any sunset clauses where the developer can pull out and say, yes, we can continue at an extra 20% or 10% or whatever it might be, that is so, so important for you to understand before you sign that piece of paper. And never be pushed into buying a property by anybody. Real estate agent, advisor, property company, you shouldn't be. You should be having independent advice around what is right for your personal situation. And that is something we have seen a lot of companies do over the last couple of years. And I think their time is closing, because those investments just really don't work anymore. And you're going to get to a point where it slows down and it will stall, and we will see some people unfortunately go under. But that's because, and that's the developers, I mean, but that's because they've been greedy. You know, you can't just buy land and continue to build on it if people stop buying. And you can't keep inflating the prices and the rent sort of stays the same. It doesn't work anymore. So we're seeing, and have been even over the last couple of years, much better returns on existing property. And yes, you can get 20% deposit on existing property. You just need to use a non-bank lender, and they're very competitive in the market. So don't be afraid about that. Talk to a independent mortgage advisor who will be able to help you with that. There's lots of people around. We can put you in touch with somebody if you want, but there's plenty out there. And actually make sure you're getting the right advice for your situation, and don't get sold the dream, because the dream isn't always going to be the reality. Sometimes it is, but you need that independent advice. But I think as we move forward, these other lenders in the market are absolutely going to be the key to investing moving forward. And the great thing is about existing properties is you've never got on Trade Me or realestate.co.nz and just bought the dream investment because it works on its merits the day you buy it. You've always had to look for potential. What can I do to the property to increase its return, to increase its value and its yield, its end return? The money coming in, money going out, have I got money left over? Yes, great. Or I don't have to top it up by $200 a week. You're actually finding that now, as the market changes, you will be able to go, that's close, but I could negotiate that price down to make it not close, but great. And that's the market we're moving into. You're moving into a buyer's market where it's like the sale at Noel Leeming's, where you never go to Noel Leeming's on a Wednesday, you go at the weekend because there's a sale on, but you're going to be the person that turns up to the sale and you're the only one there. And you've got your choice of what you want. That is the best time in the market, because property is a long-term game. It is not 1, 2, 3 years. It is long-term. And if you think about it like that, you will make good decisions. You also need financial advice. So that's pretty much what I wanted to say, because I think it's really important to understand the market we're moving into. And I think there are some great opportunities coming. So keep listening. And if you want to come to one of our free events, propertyapprentice.co.nz, and we'll see you there.